So let's start with the first chapter of audit, nature, objective and scope of audit. This lecture is already covered in Hindi and link is in the description. The link to the notes is also in the description. So with that, let's start. What is auditing and why it is done? So what is auditing? You might have heard in news that some company got audited and there was a fraud. They were hiding this much money. They were hiding some transactions. So what is the purpose of audit? Why audit is done? So let's see this with an example. There is a company, for example, we can take Jio. So Jio is a company and many people are connected with Jio. Like they have investors, government, employees, creditors, suppliers, etc. So all these people are connected with Jio. Investors have their money. They invest their money in Jio. Government wants tax from Jio. Employees want their salary. Creditors want their interest. Suppliers want their payment. So all these people are interested in their financial statement, Jio's financial statement, because all their interest lies in Jio. Some way they are connected, their money is invested or they have given money to Jio. So how Jio is using their money or how Jio is going is a concern for them. That's why they are interested in financial statements. But they are doubtful that if these financial statements are fabricated, Jio have fabricated these financial statements and not shown a true and fair view. So for that, all these people are also called users of finance, users of financial statements. So all these people are users of financial statements. Why? Because investors will see if they should invest their money in Jio or not. Government will see that if Jio is hiding some income or something. Employees will see that if the company is having profit, if the company is incurring profit, are they increasing our salary? So all these people are interested in financial statement of the company. But there is a doubt that if these statements are fabricated, so to remove that doubt or to eliminate that doubt, the financial statements will be checked or will be audited by an auditor. What will the auditor do? He will perform an audit. So the auditor, now the auditor has to be someone who is independent. What independent means? Without any bias. Bias means discrimination or prejudice. So he should not have any bias or prejudice towards the company, and he should not be influenced. So he should not be influenced, not economically or not socially. Let's take an example. So this is person A. He is auditing Jio for an example. So now for believing A, he should be independent. What independent means? He should not be employee of Jio. He should not be a creditor of Jio. So this comes in economic, because employee has a dependency on Jio for his salary. Creditor has his money given to Jio. So they will not do anything to harm Jio if there is a misstatement or there is something that they should reveal or they should disclose. They will not do it if Jio is facing some loss by it. So they are influenced economically. What socially influenced means? Person A is brother of the owner of Jio. So if he is the brother of the owner of Jio, why would he want to cause any damage or any losses to his brother? So that is a social influence. Now next come no personal interest. Ab A should not have any personal interest in Jio. For example, if A has bought shares of Jio or A has invested in Jio, so A will be concerned about his money. A will not reveal or not give an opinion that could cause Jio any losses. So this is what independent means. So all these factors, if they are satisfied, then the auditor will perform audit. Auditor provides them with reliable audited financial statement, confidence assurance. Now the auditor will perform audit on financial statements and the users of financial statements will get confidence and assurance. Assurance means certainty, which will help the users of financial statements to make decisions. So this is why the audit is done. Now let's cover the definition of audit on the next page. So definition of audit. An audit is an independent examination of financial statement, financial information of entity, whether profit oriented or not, and irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion. So there is a view of expressing an opinion, that's why audit is done. Now let's see what comes in this definition. First of all, it is an independent examination. So what the independence means? That no social influence, no economical influence, no personal interest of the auditor should be there. That is what independence means. Implies that the judgment of a person is not influenced by anyone. So this says that the person auditing the company's financial statement should not be biased, should not be influenced by anything. Now the definition also states that any entity can be audited, whether it's an NGO, whether it's small, large, medium, irrespective of legal structure. Now there are various legal structures like LLP, a private company, a public company, partnership. They all have different legal structures, but all can be audited. Now next, the purpose of audit. So as we have covered, there is a view of expressing an opinion of the auditor. Audit is done with a view to express an opinion on the financial statements. To express opinion on the financial statement. Now first, the accounts have been drawn up with reference to entries in the books of accounts. So what reference means? Vouchers, journal, all these references, they should have bills, they should have evidence, references from which they have drawn up their books of accounts. Supported by sufficient evidence, evidence comes like vouchers, journal entries, bills. No entries omitted in the process of compilation. Now no entry should be omitted in the compilation of books of accounts. Next, information in financial statements should be clear and unambiguous. So all the information should be clear and unambiguous. There should be a certain information, nothing should be unclear. The financial statement amounts are properly classified and described and disclosed in the conformity with the accounting standards. All the accounting standards are followed duly and all the financial statements are classified, described and disclosed as per the AS. Provides a true and fair view of assets and liabilities. So the financial statements will provide or must provide a true and fair view of assets and liabilities. If it doesn't, then the auditor will disclose or will express an opinion. Now the assurance part will be covered in the next part of this video. Please subscribe to our channel so that you can be notified when we upload a new video.